Hey everybody, this is John. Welcome to the free video. So let's cover the markets, and then let's cover one interesting stock here. And one question I get asked about a lot is pinning. And is it viable? Is it something? How does it work? And one we were talking about here was EA, Electronic Arts. And yesterday, it closed down here around 78.50. And what we started doing is looking actually for a decent move up to 80, and so we brought a broken wing butterfly and everything like that, and started selling some put credit spreads, and got a lot of questions as to, well, why do you think it's going to go to 80? Okay, and what's interesting, well, let's look real quick. So as we go along here and we look at the open interest, I always like to look for what I call an extraordinary amount of open interest. And so as you go along here, you can see open interest on the put side, nothing extraordinary, open interest on the call side, and all of a sudden this really stands out. And this is the $80 strike. And what I've noticed on stuff like this is that when you see extraordinary open interest, like way higher than any other strike, okay, on one side but not the other, it tends to act as a magnet. Now, why is that? Well, I mean, there's a couple different theories. I always look at it as, think of it as one fund is short a ton of these options, the $80 calls, and they do not want them to go in the money. So other funds will bid it up and try to push it through 80 and kind of get some action going and kind of make them nervous, etc., etc. Now, it didn't close right at 80, but it was really close. And so we were able to take that and just set up positions where we sold $80 puts. We did different strategies that would be profitable if it could grind up there into $80, and it certainly did, and it was a lot of fun. So anyway, stuff like that, when it happens, when you find it, it's a good idea to take advantage of it, and the best way to take advantage of it is to sell premium. Okay, so what about the stock market as a whole? Well, a couple days ago, well, right here, we did get a sell signal. So when we took out this low bar, it generated a sell signal. When you get that sell signal, what you're looking for as a first test is a reversion to the mean, okay, which is that moving average. We got that. And then from there, what I was looking at is we took some profits, and then I just held a stop loss above here with the idea that we could come up and potentially roll back over, just in case that happened. Well, then this morning we gapped up and just kept on going. So in this case, got out of my shorts and then turned around and jumped into a couple of positions for next week. My favorite one here is Google. I like Google here because we are, I believe, $4 from new all-time highs. And when you see something in that kind of a situation, I know a lot of times people are hesitant to, like, oh my God, it's near all-time highs. I feel like I'm in it too late. But you got to keep in mind, Microsoft, over the course of its lifetime, made over 1,000 new all-time highs. You know, we don't know 10 years from now how valuable Google's going to be. We just know that, hey, you know what? When there's all-time high territory, there's no resistance there. And so when you kind of get up in that area, it's blue sky, and it does kind of act as a magnet until it doesn't. So I like that, and I'm just looking for a move to the tree line there to $822.99, give or take. If it got up to $819, $820, that'd be fine. So we did buy some calls on that. You could also obviously sell some put credit spreads. And then one trade I liked here was Triple D. So Triple D had earnings, and the earnings went through the expected move. And then typically what happens when it goes through the expected move, it will trend higher for the next 6 days. So, and I don't mean just Triple D, just any stock. So how is that something that, is that something that can be, after the fact, after earnings come out, how can you work that? And so on something like this, especially these smaller stocks, when I see that and we're scanning for it, it's like, all right, let me buy some of the stock, and then let me sell these put credit spreads. At the time that we did this, we bought the stock at $14.10, sold the $14.13 half put credit spread, sold the $14 puts, sold the $14.12 put credit spread, sold more $14 puts, and sold more $14 puts. And we closed today at $14.70, so these all expire worthless. That's great. Got a little bit of money in the stock and a decent profit in the trade. And that's just that's a pattern that I've seen happen over and over and over again. And if it happens with something like a smaller stock like Triple D, then it's great because you can actually buy the stock as well. Or Fitbit actually did the same thing. So bought some shares of Fitbit and then sold some of the put credit spreads there as well. So anyway, keep an eye on that. You could also do it on a bigger stock like an Amazon. It's just obviously harder to buy the stock. And in those cases, you would just be utilizing the options. And last but not least, keep an eye on the British pound for next week. They did come out and cut rates. We are hanging precariously on this fire line, and we have a squeeze. I do think this is something that's going to take a nosedive. There is no reason for this to rally, so I'll be looking at buying some put options on FXB for next week. So one question that comes up too, and especially like Lulu, I mean, that was one that's coming up that I like. You know, how do we find that kind of stuff? So a couple of things here on the scanner that I just want to show you. First of all, the MTFA, which has just been, I think, indispensable in terms of overall trend trades. And because at a glance, you can sit there and take a look and say, okay, on the daily chart, the 4-hour chart, hourly, 30-minute, and 15, get a feel of the major markets without having to look through a bunch of charts. So for example, the hourly chart of crude oil, it's got a big squeeze setting up. Okay, I want to look at that over the weekend. We can see obviously that the hourly chart of the S&Ps has now triggered long after showing some hesitation early in the week. And as we scroll down here, I do like to look for squeezes, but I also like to look for what I call trend turns. And what will happen with the trend turn is that like something like gold that's been an uptrend, you know, it starts off here and then you can kind of see it rolling into the larger time frames. And then at some point you can see it, if it starts to start going the other way, we'll start seeing the squeezes that'll fire long, et cetera, et cetera. One thing here that stood out a lot is that the grains are trying to bottom out. So if you like to trade wheat, you can see here wheat, it had been, everything was red, and we can see, you know, this turned higher, this is turning higher, this is turning higher, and so that's something that's very useful. And then as we scroll down here and we look at some of these stocks, and some of these stocks were ones that I'd used to find the trades that we talked about earlier, but look at Baidu, man, this thing's on fire, and you've got a daily squeeze setting up here. And Google, same thing. I mean, I really like the stock right now. You got daily trend up, 195-minute trend up, 78-minute trend up, 39-minute squeeze is fired long, and the 15 is teeing up for Monday, okay? And so the list goes on there. And then what about something like Lululemon with the short squeeze? Well, great. Come over here to daily scan. Come over here to daily scan, and then you can go to daily pop squeeze candidate. So what is this? These are stocks that have high short interest that are trading close to new 52-week highs, and they have a squeeze. And you can scroll through here and take a look at these. Let's see. If I can scroll down here, there we go. And now some of these, what will happen is you'll see some of these stocks are like, okay, well, you know, Virgin Airlines, it doesn't count. We're not going to play it because it's a takeover candidate, right? But look at this. Oh, I wanted to look at this one too. T2, that one looks interesting, but here's Lululemon. So it's within 9. So when it says 96 there, that means, you know, here's the 52-week high right there. And then over here is the 52-week low range for the last 365 days. And it's just saying like it's at the 96% level, meaning it's 4% below new all-time highs. That's what I want to see. That's where the shorts get nervous, and that's where they're like, oh my gosh, we got to get out of this. 18% short interest. Okay, T2 also qualifies for that. So now, having said that, let's go look at those again. So now Lululemon gets interesting because not only is there a squeeze here, but now we know there's all that short interest here, and that if this goes and they're throwing the towel, because they get stopped out too and say, my gosh, we got to get out of this. Well, if there's that much short interest and they're going to be covering and covering and covering, that can drive up the stock a lot faster than normal, okay? And then if we look at TTWO, you got the same kind of a situation here. Now I think they had earnings today. You can see it did pop up and come down, but again, we've got a squeeze, we've got high short interest. I actually would look and expect that this stock continues to head higher based on that. Oh, and you know what would be helpful? If I actually just kind of move this here so you could actually see what I was talking about. So so you got the squeeze here, and boom, kind of that pullback on T2, and then real quick again on Lulu. You can see there that nice consolidation. So it looks really good there. So there are other scans on here. The ones I find really useful are the intraday. I love this 195 bullish and bearish continuation. That sets up kind of nice hidden plays that you might not otherwise see. Weekly scan shows up the bullish continuation one is really, really good. And then you got stocks under 10 bucks. What you guys may not know is the blueprint. The growth 250 are essentially the fastest growing, healthiest 250 companies that go through a ton of fundamental filters. That's kind of where you find, the next Microsoft kind of a company, and those are fun. And we combine those with unusual volume, all that kind of stuff. So this is a huge, huge thing. Now I'm letting you know this because right now the scanner is $49 a month. And as we're starting to build this out, we are going to raise the price to $79 a month. For those of you that have it at $49 a month, you will be grandfathered in for as long as you want it. You're never going to get the price raised on you, but we are going to raise the price to $79. And this, your monthly subscription includes all the free upgrades and things like that we do to the scanner. If this is something that you're interested in, I would encourage you to get and lock in this price. I'll leave the link here for you. You can go to, let's see, I'll get it real quick. So I'll show you the link here in a second. I'll take you to this page. There's a video there that explains kind of how it works. There's a little more documentation on it. You can see right now it's still $47 a month. And there's also, you can see how some of us, myself, Chris, Henry, Tucker, and a few other people use the scanner and kind of get you up to speed on that. And that scanner, you just go to simplertrading.com/scanner. And again, if you're seeing this, you should still have that opportunity to go here and sign up for the $47 a month before we raise the price. And I would encourage you to lock that in. All right, I hope it helps. You guys have a great weekend, and we'll see you at the next update.